Well, good morning. Welcome to today's webinar on the question of whether the City of London has benefited from Brexit as the golden days continue to fade. I'm delighted to have with us Graham Bishop, who is our keynote speaker today. My job here is to speak very briefly to get us underway. First of all, to thank our sponsors. We're very fortunate at the FS Club to have a range of sponsors who enable us to run this series of webinars and keep on building connections and knowledge across our network. We really are very grateful to them. You probably know me. I'm Mike Wardle. I'm the Chief Executive here at ZN. And as I say, my job is very much to get out of the way in a minute after we've done some housekeeping to give the floor to Graham. So today's agenda is very simple. After my introduction, we've got about 20 minutes for Graham to give his keynote presentation, and then we'll have 20 minutes for question and answer observations. If you haven't used GoToWebinar before, then the way to ask a question or to make a comment is to find the questions tab on the dashboard on your screen, open that up and type in your question. That'll come to us. And you can do that at any point during the session today. So anything that strikes you, or if you have questions already that you know are you're likely to come up, please do get them in early. The session is being recorded today so that if you miss something and want to go back, or if you want to share the recording with friends and colleagues you think might be interested, the recording will be up live on the website in a couple of days, and please do make use of that facility. The final piece of housekeeping is if you do ask a question today, we will pass your contact details on to Graham afterwards. So if there's an issue which has been not fully answered, then there's an opportunity for further connection and conversation to take place. So Graham Bishop is the Senior Research Fellow at the Global Policy Institute, and really quite an expert on matters European and Brexit. Graham, we're really looking forward to your presentation. Over to you, the floor is yours.
Right, good. Thanks very much, Mike. Yes, I spoke to this group, I think it was about 2 years ago, on roughly this topic. And I've been observing what's been going on since the referendum, really. But most recently, as we've been in the throes of leaving, then finally left the EU. So I thought in the summer it was about time to update what I thought about it all, which is why I wrote this report. Has the City of London benefited from Brexit as the golden days continue to fade? And I think my conclusion at the end is that no, it hasn't benefited, but I'll try and justify that as we go through, and look forward to anyone having a contrary view. That would be very interesting. So if I could have the next slide. I'm going to do this in two parts. First of all, on the micro topics, and then secondly, on the macro topics. So let's start with the micro, equity trading. I think everyone was aware of the risks that Article 23 of MiFIR, the share trading obligation, made it required that trading in EU shares had to be carried out in the EU, and that was from a requirement from many years ago. And of course, while we were a member, no problem at all. But the moment we ceased to be a member, trading in EU shares left London and moved to Amsterdam. And it is worth noting that there's no other single city which is sort of rivaling the City of London. It's different types of industry are congregating in different places, but there's no reason why it shouldn't happen in the world of the internet and Zoom calls and the like. You can be anywhere. So equity trading went to Amsterdam. Now, we also had the listing of new shares, and this has been a topic for quite a while, actually. The new listings have dropped off, and we've had various attempts at proposing easing of the rules. But there is a fundamental question here. We've seen the reduction in listing of shares in the UK, but the EU has suffered from much the same problem. And there is a real de-equitization going on of European finance, which is a big problem for the whole of Europe versus the US. So we shouldn't be too concerned about it, but there's no doubt that it's something to take a careful look at. The first thing on this de-equitization, I was amazed to see recently that foreigners, well, in my use, when I looked at these things, British pension funds and life insurance companies owned half the UK equity market, but now it's the foreigners. And the life insurance, the UK pensions and institutions are down to about 4 or 5%. We can debate why that is, but that is the lack of a home buyer for UK listing shares. That's a problem which won't be solved easily. The proposals put are that we reduce some of the listing requirements. Just yesterday, the Financial Reporting Council decided to abandon some of the reforms of corporate governance, which was proposing after the Korean disaster. This isn't altogether seen as a good thing by UK pension funds, long-term investors. What they're looking for is high levels of disclosure. So if the disclosures are reduced, that's bad news for the investors. Bond trading, that hasn't changed so much. We don't really have good data from a long way back, as we obviously do with shares. We know that the dollar euro bonds, dollar international debt securities are dominant. Then there's the euro, perhaps half the size of the dollar market. And then there are others, which include sterling. And finally, there's the yen of the significant countries. But we know that the dollar is a key factor. And what we have seen, and looking at the only data which I've been able to find, ICMA, International Capital Markets Association, has just come out with a new series of trading in bonds. And what you find is that about half of the trading in government bonds is done by the top 6 dealers, and about a third is done of corporate bonds is done by the same 6, slightly different. So bond trading, yes, it's still 50-50 with the EU, but there's a big question of what happens if the ECB pushes these desk mapping exercises and gets the banks to shift more of their trading and the risk management that goes with it. If that gets moved to the EU or into the EU, what happens then? Big question. And the big question for that is what happens to derivatives trading. As we all know, that's still dominated by London, but the size of this is huge. I did a figure for the House of Lords evidence I gave last year, and if you take 90% of the euros over-the-counter derivatives which are traded in London, that's 47 times the UK's GDP. These are nominal values, so the notional, and it's colossal. And this is exactly why the EU is so concerned that it should come in-house. The moment, when I say in-house, I mean into the euro area, where it's subject to the euro area's jurisdiction. There is a plan under EMIR 3.0 to require active account regulation that institutions in Europe should have, or in the EU, should have quite a significant tranche of their derivatives actually cleared in the euro area. But for the moment, we're waiting until 2025 before that clicks. That, of course, is when there will be a new commission. So we'll see what happens at that stage. The new commission takes office in about a year's time. So they may have a different attitude, or they may not. They may have a tougher attitude. But the other area which we should think about is asset management. That is one of the major success stories of the city, of course, always has been. But we need to think about the size of it in relation to the euro area. European Fund Management Association, IFAMA, produces some very useful data. And there's 32 trillion of assets under management within Europe, so including the UK in that. And about 5 trillion of that is actually funds managed on behalf of UK citizens. And there's another 4 or 5 managed in the UK on behalf of non-UK people. But there's 5 in the UK managed on behalf of the UK citizens. So that's 26 trillion is managed for international funds. And when we come on to talking about green management and other such things, the question of how much of this is really going to be willing to take UK green standards as opposed to European, that's a big, big question. So I think if we could move on to the next slide. And talk about the global rankings of where have I put? I almost don't need to ask this question because I think Mike can answer it. Here we are. Yes, the UK has been slipping down the global rankings, and then there have been many press articles about this. But one of the most useful and now long-run measures is, of course, the Global Financial Centres Index, which Mike has been doing for, he'll tell us how many years later, I'm sure. Anyway, the bottom line of this is that London has now slipped noticeably below New York and has been for several years now. And we have Singapore and Hong Kong catching up. So this slipping of the importance of London in the rankings is a noticeable feature. There are other rankings which show the same general picture. The question is, how long does it take, or how long will it take, for this to become profound and a real source of concern? It is a source of concern now, and people are asking what can be done about it. But this is the big problem. There isn't a simple answer. So, rule taker. I think everyone will recall the debates which were held in the run-up to the referendum, and then later whether or not we should have a closer relationship, the exact post-Brexit relationship, doing the TCA, Trade and Cooperation Agreement, and the complete absence of the cities role in that. I think it was about 4 or 5 paragraphs referred to financial services. So there was going to be a memorandum of understanding with the EU on how this would all work. But remember that the TCA, which is to be reviewed in a fairly minor way in 2025, the new commission again, that made it extremely clear, and repeatedly so. I think I counted about 12 or 16 references to the unfettered autonomy of the EU in its regulation. And so the MOU, I'm just going to read a little bit of it to you because I think that's worth knowing. This was finalized in June this year. The participants will jointly endeavor to pursue a robust and ambitious bilateral regulatory cooperation. Then we come to the actual crunch, the power. The regulatory cooperation should not restrict the ability of either jurisdiction to implement regulatory, supervisory, or other legal measures that it considers appropriate. So the EU has made it completely clear that it will not be bound by anything that the UK decides to do. The UK is quite free to do what it wants, but that's not going to have any impact necessarily on the EU. So is the MOU a method of getting some sort of handle on and influence on EU regulation as it evolves? No, it isn't. And I think that's now, despite what some people said at the time, I think that's now pretty clear. The next aspect of rule taking is the risk management of banks. And I touched on that earlier with the ECB's desk mapping exercise. What they want, and it's very understandable, we do exactly the same. What they want is to know that the banks who are taking these huge risks, and which might, well, they shouldn't, but might require public sector bailouts at some awful moment, that they are completely within the jurisdiction of the EU. So they have oversight, they can see what's going on. And as my friends used to tell me, if it goes wrong, Graham, we'll send a gendarme to arrest you. That's the power of the state, and that's what they want to have. And that's what they will get. And so gradually the risk management of banks, investment banks, is moving for euro area stuff, which is far bigger than sterling. It's moving to the euro area. The big question, which some of you may have views about, and I'd be very interested to hear, is what happens to dollar risk management? Is that going to move as well? Is it so much easier to have both sets of risk managers in the same place? Or can that stay here in the UK while euro moves to the euro area? Look forward to your comments. So the next point I want to make is the greening of the financial system. This has been a huge sort of effort in the past 5 years. The current commission set out, Ursula von der Leyen, when she came into office, set out the green agenda. That's been reinforced, and the EU has been doing a lot of detailed legislation, and that's gradually just. Yes, the green taxonomy. We all know about the taxonomy and all the effort which has gone into that. That is now law in the EU, and it's just down to how different items can be made operational, and there is a lot to be done there. We've now got the regulation of rating agencies giving ratings. And the EU's green bond standard has just been enacted, and as Commissioner McGuinness said after that was done, told the European Parliament, right, we have now completed our green agenda. What's next on our list? Well, of course, it's not going to be on her list. No, it might be, I suppose. She may be a commissioner next time round. But the EU feels that it's done the legislation, the primary legislation, details to follow, implementing measures, of course, which take effect over the years to come. But they've got it all done. We, by contrast, are still talking about consulting on these matters. Now, the problem here is when the very comprehensive EU setup of what do companies have to disclose and what do shareholders or fund managers have to take into account in their portfolios, what do banks have to take account of when they're lending and issuing bonds and so forth on behalf of their clients. All of this is a set of very detailed legislation now, and the EU has taken great care to make sure that it marries into the International Sustainability Standards Board, ISSB, get my tongue around that, so that the EU and the global standards are very closely interconnected. And actually the EU has made sure that by complying with the EU standards, you automatically comply with global standards. If the UK follows the same track, then it's going to have the same standards as the EU. So who is the rule taker now? You can see the same sort of thing for the digital area. Just yesterday, actually, was it yesterday, a couple of days ago, the new digital payments regulation, faster payments, was agreed by the European Council and Parliament. The electronic ID measure, which is key for payments, that's been done. The Digital Services Act, Digital Markets Act, the Digital Operational Resilience Act, and also the markets in crypto assets regulation, all been done and by the EU, and they're now in the process of, certainly MICA, the EBA is just starting to consult on the precise mechanics of how to resolve a crypto asset supplier if the need should arise. And of course, we've seen examples when they have arisen. It has arisen. So I've put here that what do you think about this? Is the UK becoming a rule taker de facto? on both the global standards for green and the digital standards which the EU is putting forward. We're going to have a poll after I've finished, and hopefully you will reply and we'll see whether you agree with me or not. So the last point I want to make then really is on the question of what all this does for our tax revenues and so on. I think it's well known that the financial services and related professional services provide about 13% of GDP. In his Mansion House speech, Chancellor Sunak 2 years ago talked about 76 billion of tax revenues, and that paid for a good chunk of the NHS, or twice the education budget, or twice the defence budget. Jeremy Hunt, in his Mansion House speech recently, put the number at 100 billion. I think there may be a slightly different calculation, but you get the impression, get the clear message that these are very big indeed. City UK has just published its latest report on exports, and it rates the exports of the financial services and related professional services industries as now being a quarter of the UK's entire exports. So the importance of this cannot be understated. When you talk about foreign exchange earnings, which is certainly far more at risk than tax revenues, if parts of the euro denominated activity and even the dollar activity, if they were to migrate to Europe, that's a big hit to the foreign exchange earnings of the UK. And this is a country which runs a current account deficit and has done so for many years, of something like 4% of GDP, the worst performance in the OECD by a long way. So if the city does indeed decline relative to what it's done in the past in terms of its contribution for tax revenues and foreign exchange, this will be a big problem for the UK. So I just conclude my remarks really that I don't see that there's been any advantage to the city of Brexit. Be delighted if somebody could tell me, give me some examples to the contrary. And one of the things which we need to keep in mind is that the new commission, which comes, as I say, comes into office in a year, they will have a mandate from the European Parliament, from the member states, to do a number of things, which include finalizing or completing the Capital Markets Union. Now, in the past, of course, capital markets, talked about equities and bond trading and so on, issuance, that's been a massive benefit to the city. If the EU does actually get its act together, and I'm not going to say that's a dead cert, but if it does, or when it does, then this will be a real rival to the city. Not an individual city, but the EU as a whole will be a serious rival, which it isn't at the moment. So on that note, I will finish and turn over to Mike to just put these two polls, and I look forward to seeing what comes up from your comments. Thank you.
Well, thank you, Graham. We do have a couple of polls. I'm really grateful for your thoughts. First of all, on green finance, that the global influence of the EU's green finance rules will effectively make the UK a taker, and you see the options are from agree strongly to disagree strongly. Do let us have your thoughts. Just give a few more seconds for people to put their views in. Yeah, they're coming forward. So if we just see the results there. So yes, around about half saying agree strongly, and another third I agree somewhat. So a very strong view there that we will be effectively a taker of EU rules. Thank you so much for that. Right. We have a second poll. This is around digital finance rules. And again, the same sort of question really, the global influence of the digital finance rules will make us a taker of EU rules in effect. And again, it's useful to have your views on that question. And just give a few more seconds for people to put their tick in the box. And then with the results, very similar result there, slightly more in percentage terms, saying that you agree strongly, and but very much the same set of results, saying that really most people think that we will become a taker of rules. So
Right.
Graham, that's your answer.
Well, that's pretty profound, actually. And the strength of the statements there. 3/4 of you think that we will de facto be a rule taker on two of the most massive areas of finance. That is a very profound thing. I shall remember that and report it. Right, thank you.
Thank you. But equally, there were a fair number of people saying that they disagree somewhat with that statement. And if people would like in the questions, comments to expand on their views on that, we're very happy. But we have a first question from Clive Bullen in the audience. Really straightforward question. Two questions. Are there any benefits of Brexit? Should we rejoin the EU? Says Clive.
Okay. Sorry, did I understand that? Should we rejoin the EU, or are there any benefits of Brexit anyway?
But both of those questions. So the question is, first of all, are there any benefits of Brexit? Second,
Right.
should we rejoin the EU?
Right. I have yet to find any benefits of Brexit as far as the city is concerned. I do not know about elsewhere. So if anyone disagrees, I'd be delighted to hear. Should we rejoin the EU? We have a problem. Yesterday, the Commission announced that it is going to propose that the EU open accession negotiations with Ukraine. Now, Ukraine is a very big country, 40 million, well, it used to be 40 million people, is very poor, it's very agricultural, and there are a number of agricultural countries who will be interested in that, in the existing EU. And it's also got an amount of reinvestment or investment to be made in restructuring its infrastructure. So this is going to be a profound consumption of the EU's bandwidth in any sort of accession negotiations for the next decade. And it requires a major rejig of the governance of the EU. And that will also bring in the question of public finance rules and all the rest of it, the Stability and Growth Pact. So is the EU going to be willing to consider an application from the EU for from the UK quite some time? I doubt it. And certainly the message I get, despite being very friendly with people, is we've been so awkward for so many years. Thank goodness you're not here to get in the way still. Do they want us back? Only if it is completely clear that we really do mean that we want to stay. The political parties have made an irrevocable decision. There's a referendum, or however it may be. There's a really strong commitment that we won't just be awkward and leave again.
And does that apply also, do you think, to rejoining the single market? We'll still be a rule taker in those kind of ways, but could we rejoin the market?
No, you can't join the single market without being part of the EU. You can mirror it in the way that the European Economic Area does, and Switzerland does to some extent, and so on. You can, but then you're a complete rule taker. In the old days, the Norwegians always talked about the fax economy. They would get a fax from Brussels telling them what their new laws are on whatever the subject was. I think that will go down badly here in principle, but that's what we're going to do. And from the answers you've just given to my questions about rule taking, it's fairly clear that 3/4 of you expect de facto that's what's going to happen in two important areas.
Thank you. Shane Drinian asks, is there a way that the UK can fix its trade deficit issue post-Brexit? And obviously, does this calculation change if Britain were to rejoin the EU, notwithstanding the difficulties you've just mentioned with that process?
The problem is profound. I think I don't look at the goods figures so much, but I think we import roughly twice the goods that we export. So in the old days, 50 years ago, when I first came into the city, if you had a big devaluation, your shipbuilding industry would become very competitive versus Korea, because you made everything here. You mined the coal, you mined the iron ore, you made the steel, and you had the labor. So it shifted your terms of trade dramatically, but that's not the case anymore. In fact, there is no shipbuilding industry of any significance. So all those sort of industries have gone, and what exchange rate would bring them back, I've been shuddered to think. So how to fix that trade deficit is very difficult. The one thing we don't want to do is finish up having trade agreements which effectively obstruct us, undermine parts of, for instance, the Australian deal. What does that do for farmers and so on? But we have a rush to, at the moment, we're just trying to replicate the trade deals that we had via the EU. I'm not aware that we've signed any which are, in fact, an improvement on what people have offered the EU. Would it be fixed if we rejoined? Not quickly, not quickly. When you've got such a profound trade imbalance, this is decades, I'm afraid. In the meantime, racking up ever bigger foreign debts. And I remember Mark Carney's words, former governor, of beware of relying on the kindness of strangers.
Yes, and I think there's some very interesting things are going on, looking at how international debt is working, and who is and isn't holding US debt, for example, and who isn't buying US debt at the moment. And this is another way that economic advantage is sought. Turning on to another issue, Jose Arzola asks, regarding the eventual migration of the clearing and settlement of euro-denominated derivatives to the EU. Is the EU already preparing the appropriate infrastructure as well as the legal framework which will need to be in place?
I think the answer is yes, but that is the big question. What they have realized correctly, absolutely correctly, is that they have to, this can't be a matter of with something so vast. It's 10 times the EU's GDP. It's something so vast, you can't just demand it be done tomorrow, because if it goes wrong, you have a systemic crisis of the first order instantly. So they are driving forward how to improve the infrastructure in the EU, and that's the idea behind this active account regulation. I forget what the number is it 10% or something of participating institutions have to have that in their in EU CCPs. I suspect that the answer will actually come from the private sector, that those half dozen banks that I mentioned who dominate half the trade in government bonds and so on, they will decide, they will be pushed by the ECB to move their euro-denominated trading fully, and its risk management, fully into the euro area. And with it, they will then be required effectively, that there isn't an equivalent to the share trading obligation in MiFIR, but they will be required to trade those derivatives within the EU. And once the market sort of shifts like that, then the whole weight of it will do, because the banks will say to their customers, we want to clear in the same place as you, so you should move your derivatives to where we're clearing, and we're clearing in Eurex because that's where we're obliged to. So there will be a magnetic attraction together with a strong push, but I don't foresee any actual outlawing, not in a decade. At the end of a decade, that's another thing. But you can see exactly why the EU is very concerned about the gigantic financial stability implications, which they do not have a direct handle on. Yes, they're sitting in oversight boards, etc., colleges, but what good did that anyone do with Credit Suisse, etc., etc.? When the crunch comes, it comes very quickly and very suddenly, particularly with derivative trades. Witness the LDI problem in the gilt market.
Thank you for that. You mentioned sort of London's position in the Global Financial Centres Index, which, as you say, that we're now in second position and have been in second position to New York since 2018, but only just ahead of Singapore, Hong Kong, and other challenging centres, particularly US centres outside New York, who are making very strong progress. And Stephen Burr has asked, have we simply played into the hands of the French and the Germans, who want nothing more to see the UK lose its powerhouse status in the world of finance. He asked an interesting question: why wasn't this predicted during referendum arguments? I think it was. And who should take accountability for misleading the public in this way? So have we played into the hands of the really strong financial powers in Europe, and who should take accountability?
Well, first, the answer is simply yes, we have played into their hands, and we knew it. Of course we knew it. And anyone who ever went to France, in particular France, not Germany, Germans are not that keen. They're much more into engineering than finance. The French are very much into financial engineering. I can remember going to big events in Paris many years gone by, decades gone by, where the French finance minister would come and address the Parisian financial elite and say, and I was a fly on the wall, say, look, you've asked for this, you've asked for that, I've given you this break, I've given you that break, I've done whatever you've asked for, why are you not delivering a competitive financial marketplace? So when we decide to shoot ourselves in the foot, there you go, they will jump in and take advantage. Now, who's to blame? Well, I think there's a blonde guy around, or used to be, called the Prime Minister. And as you sit and listen to this appalling stuff from the COVID inquiry, the words fail you. That's where the accountability was. And why wasn't it seen? It was foreseen. I used to go around regularly saying it. I could dig out my old speeches, but I'm not the Prime Minister. Never was and never will be. But people didn't want to hear. They wanted to hear nice, warm, fuzzy statements, which were all bravado and plucky little Britain, etc., rather than actually thinking about the hard-edged commercial aspects. And here we are.
Thank you very much. Deepak Lalwani has asked, to what extent will becoming a rule taker accelerate the decline of London? Where do you see London's position in the next decade, not only because of Brexit, but also because of the rise of the Far East, because of other global trends?
Well, I don't expect that the EU will deliberately, with the exception of CCPs, will deliberately enact regulations which damage the UK, because it is massively in their interests to have an effective capital markets union. And that requires sensible rules which actually work. But all that will happen is that gradually securitization, to name an example, will been a bit of a flop so far in Europe as a whole, but hopefully the EU will get its act together and will enhance securitization to the point that it becomes a serious business. And the big thing here is that the sunrise industries will rise in the EU, in the euro area, and that will leave us with what we used to talk about, the Rust Belt industries, when we're talking about the US, will be left here. That's the biggest risk to us, not deliberately passing legislation to damage the UK, because that would damage the EU as well. So they won't do that. But it's fostering capital markets union arising in the EU. And when we talk about other industries, asset management, of course, we have the question of delegation. I suspect we're just one scandal away, or maybe it's two, from a big tightening of the rules on delegation, that they actually have to be, the assets have to be genuinely managed in the euro area for the same financial stability and accountability reasons as for CCPs.
Thank you for that. I might just add, taking a view from being the researcher for the Global Financial Centres Index, London still has the advantage of having sort of global trust. It is a global city, which means that people feel they can come to London and pretty much feel at home. They can do business here, and there aren't many places in the world which have that kind of feel to them. But you do see the challenge coming. I mentioned Hong Kong and Singapore. I'd mentioned the Gulf and looking at Dubai and Abu Dhabi, who are wanting to position themselves as somewhere where you can come and do a deal wherever you start off in the world. And it's that challenge, I think, which is one that certainly we're watching. And the only reason that I think London maintains its position at the moment within Europe is that, as Graham was saying, there's no other single EU city which has reaped the benefit. You know, some jobs and work has gone to Paris, some to Amsterdam, some to Luxembourg, some to Frankfurt, but it's not concentrated in one other city. I just wonder, Graham, you know, equally with your crystal ball
Yes.
gazing hat, are there areas where you think there are opportunities which come from the current position of London? Or is it really, because I don't think we've seen any benefits, but are there potential opportunities that might come from being outside the formal structure of the EU?
I haven't talked at all about English law and the role of it, because it obviously has an influence on American law, common roots. And I don't, again, I would be delighted if someone corrected me on this. I don't see any challenge to English law, partly because everyone knows it. It's got the advantage of being the incumbent, and so that may yet be something which can be quite handy. But the British judicial system will continue to provide sound, impartial judgments, providing we don't do things, we don't change any of our legal structure which is adverse to foreign litigants. So that's one area where I don't see a challenge. On the contrary, that may be built up even. But beyond that, I'm very hard pressed to see where it's going to come from, any real benefits. And I'm interested that nobody, I think, disagrees strongly about the rule-taking aspects. And I don't see anyone asking questions saying, you've missed out X, Y, Z. That's a massive benefit to Brexit or from Brexit.
Yep. Well, Graham, thank you so much for coming and giving us an update on your thinking on where we are post-Brexit and what the impact will be of you know, the current position on the city. It's very interesting. We're running out of time, I'm afraid. I'm sure we could have continued otherwise the debate a lot longer. So I'm going to bring things to a close. First of all, by again thanking our sponsors. You know, we really are grateful for their support in enabling us to do the work we do and connect you all. But then also looking ahead, we have some other interesting topics coming up. Why London is the best place in the world to resolve legal disputes. We've just been talking about the impact of common law. So do come along for that on Tuesday. And just noting that, of course, you know, if you look at Dubai and Abu Dhabi, they've taken common law for their financial district, and you know, but still, London is a very good place to be. On Wednesday, the psychology behind getting what you want with Raj Basu, and Tuesday, the 21st November, Adapt, Evolve, Thrive, keeping the Tower of London relevant for future generations. So for some fascinating stuff, keep an eye on the website for other forthcoming events. But it just remains for me to thank you, the audience, for your attention and engagement and your questions today. And finally, to thank Graham. That's really useful and you know, interesting dig down into where the impact of post-Brexit life is taking us. So thank you so much for your time and your preparation today. Thank you.